still at the fag end and earnings coming in thick and fast. So let's address Shipping Corp's numbers. Let's welcome on board HK Joshi, the chairperson of the company, joining in on the show right now. Mr. Joshi, hi, good morning. Good to have you today on ET Now. Help us understand how is it that you're assessing the performance of the quarter gone by, because as I can see it, your margins have contracted in the current quarter. What is the visibility that you have on margins being stabilized anytime soon?
Good morning to everybody. Thank you for having me on ET Now. With respect to the margins having contracted, I would say that's not completely true, because if you compare it with the corresponding quarter of the previous year, yes, it has contracted. But if you compare it with the immediately preceding quarter, then we have almost tripled our operating profit from the March quarter. So that way the company has done better, and the margins haven't contracted over the previous quarter. And if you are talking about comparing it with the corresponding quarter of the previous year, then I would draw your attention to the skyrocketing tanker prices at that time due to the contango effect, and because of which a lot of floating storage was created. And if you compare our segment results, you would clearly see that in the previous year, corresponding quarter, the tanker had made a profit of 406 crores. And in the current quarter, it is at a loss of 63 crores. So that clearly gives an indication of the market impact of the freight rates on the company's performance. The company is largely driven by the market indices. And in this context, I would also like to share with you that the Baltic Clean Tanker Index, which was in April 20 at 1,305, it is currently at 473 levels. So the results that you are seeing are not unique to the Shipping Corporation of India. This would be the phenomena for all companies which are largely having a very strong tanker fleet. I hope that answers your question. And with respect to the prospects going forward, we consider we would remain stable. Considering that we are a very diversified company, we operate in all segments of shipping. And as you would see that in the corresponding quarter of the previous year, the liner segment had a double-digit loss, but in this quarter, the liner has a triple-digit profit. So this sort of balances out the company's performance, and it gives it a stable outlook to the company.
Sure. Sure, it does help answer our questions, Ms. Joshi. But I also wanted to understand predominantly what are the non-core assets that you have on your books, and what is their broad business and revenue contribution, if you could help us understand that.
I'll not be able to give you complete details because, as you know, this constitutes to a certain extent UPSI, and in May 2021, SEBI LODR has come out with very clear regulations saying that I cannot disclose more than what I have already disclosed on the stock exchanges. But it is there already in the public domain, but I cannot give you information precisely what you are seeking in terms of the earnings and the contribution, because I haven't still disclosed that to the stock exchange either.
Ms. Joshi, just coming in on something I think a lot of people are asking about, which is on the divestment front. Have you heard anything? Is there anything that you can tell us?
On the divestment front, the virtual data room is open. We had opened that in July 2021. The virtual data room is being managed by DIPAM, while the data is being uploaded by Shipping Corporation of India Limited. The data room is exclusively managed by the transaction advisor engaged by DIPAM. And the data room is currently still on for the due diligence by the prospective bidders. And once the due diligence process is completed, DIPAM would float an RFP calling for the financial bids. And as of now, the information that I have, the transaction is scheduled to be completed in FY22.
Okay. Now, another factor that a lot of people are focusing in on is what the medium-term prospects are for the business. So can you give us a sense, if you can look a little bit further down the line and tell us how things will look?
As I just given in my opening remarks, the company's outlook, even in the medium term, looks very stable because we are primarily a diversified company. So even if one segment doesn't do well, we've always seen that it gets offset by the performance of a different segment. So the liner segment is currently doing extremely well. And throughout FY22, we consider that the liner segment will continue to boom in profits. And even the bulk segment is currently giving a very stable outlook. And we anticipate that the same trend is going to continue in the entire FY22. With respect to the tanker segment, we are not very optimistic. We consider it's not going to be really a game changer until and unless the winter demand picks up or something dramatically happens to the COVID protocols and the demand and supply equation changes. Until then, we do not see the tanker segment as a very optimistic segment as of now.
Hi, Ms. Joshi. This is Mubina as well joining in. The one trend that we hear from a lot of businesses is the shortage of cargo vehicles, of containers. We understand that there is this shortage seen of containers. I just wanted to know, for Shipping Corporation, do you see any repercussions, any impact of that? And of course, as a consequence of that shortage in container, the price as well has gone up significantly. So just want to know, are you seeing any ripple effect of that?
As far as Shipping Corporation of India is concerned, we are not facing any shortages per se for Shipping Corporation. And we've got a good inventory of containers and we are ensuring a proper turnaround. And that is what is giving the company good yields on the container segment. But you are right, as far as the global phenomena goes, there is a tremendous container shortage, and that is what has actually boomed up the container prices. And as of now, the container segment continues to skyrocket in the prices at unforeseen levels as of any visible time in the past. But the container inventory position has improved in the recent months. So it's not as bad as it was about 3 months back. Things are improving. The turnaround at the ports is also improving. With the most countries having completed the double vaccination, things at the ports are much better than what they were about 2 to 3 months back.
Okay. But nevertheless, pricing still is elevated. Is that right, Ms. Joshi? So in a way, that part of the business should then be a big margin contributor for you, given the fact that you've managed to maintain a good inventory of containers.
Yes, you are absolutely right. The container market, we anticipate throughout FY22 will be at a boom at a high price. These prices are definitely not sustainable, but the current trend is that all the leading containers players, the container vessel owners, they have mopped up every possible container in the market at an exceptionally high rate, and these vessels have been booked for almost long-term rates of 5 years at prices of $90,000 per day, charter rates, unimaginable rates. So we consider that for at least FY22, these rates will prevail. The high freight margins will be there throughout FY22.
Ms. Joshi, such a pleasure having you today on the show. Thank you for taking the time out and speaking with us.
Thank you.